What's the most stressful part of running a business? For many, it's taxes and HMRC, sleepless nights over compliance, last-minute panics before deadlines, and the fear of making a costly mistake. It's enough to make anyone break out in a sweat, but what if it didn't have to be that way? Today's guest, Paul Aplin OBE, is a pioneer in the world of tax and business strategy. With over 40 years of experience, Paul has been at the forefront of transforming the way that businesses approach tax. He's a key figure behind making tax digital, an innovation that is making compliance simpler and less stressful for countless businesses. And Paul's work has earned him some of the highest honours in his field, including an OBE for services to tax and business. Today, we're going to explore how to reduce tax-related stress, avoid costly pitfalls, and even turn HMRC interactions into opportunities for confidence and clarity. Welcome to De-Stress Your Business, the podcast where we show you how to get incredible results in your business without constant stress. I'm Alexis Kingsbury, a serial entrepreneur and founder at AirManual, and I'm joined by Paul Aplin OBE. Welcome, Paul.
Hi, Alex. Thank you.
What is it about HMRC and tax compliance that seems to cause so much stress for business owners?
I think it's the same thing the whole world over. You mention the word tax, people get stressed. It's human nature. What makes it stressful in a business context? At the highest level, I don't want to pay it. Of course I don't. I want a fair tax system, and a fair tax system must mean that I don't have to pay as much as other people. But once you get beyond that, where does the stress come from? You said something just now that really struck me. It's the last minute. We don't want to do it, so we leave it to the last minute. That's where a large amount of the stress comes from. Where does the rest of it come from? I think a lot of it comes from uncertainty and lack of predictability. If you don't know what the result of something's going to be, you get stressed about it. Sometimes when you do know what the result's going to be, you get even more stressed about it. But not knowing, it's really hard to plan in a business context if you don't know one of the big numbers. Tax is a big number. The other thing is planning, looking ahead, creating space, making time to think. It's really, really important. We're recording this in January. So across the country, there are hundreds of thousands of people thinking about their tax returns. They should have been thinking about it months ago. You've always got people in that last week of the year. I mean, something like 250,000 people generally file on the 31st of January. I bet then you started putting their records together a few days or a few hours before they filed. The trouble is when you're doing that, you're firefighting, you're scrabbling to get those bits of paper together, you're scrabbling to get the result. If you're an accountant in practice, you're thinking, why didn't the client bring this in months ago? What you really want to do is get that return in before midnight on the 31st so there's no penalty. I always found if I looked back at my files and I found I'd made a stupid mistake, it was generally the last week of January because I was stressed out. I was playing the numbers game. I need to get X returns in by midnight on the 31st. If I made a stupid mistake, it was one of those final returns. And sometimes it was the head in the hands mistake of how on earth could I have done that? It just stands out. So what's the first thing you need to do? You need to get away from that last minute rush. And I know that's easier said than done. I was always there at 10:30, 11:30 on the 31st, doing that final trawl through the list of clients just to make sure I hadn't missed anybody. So I'm kind of giving advice that I didn't follow myself as much as I tried. But if you can get people to bring stuff in earlier, firstly, it takes a lot of stress off you. And secondly, it gives you the chance to do the really interesting part of the job that you can charge more money for. And that's advising people on how to pay less tax. And again, I guarantee the people who were bringing stuff in on the 30th, 31st of January, and somehow expecting you to wave the magic wand and still get the return in, were the ones who wouldn't think about it again for 12 months. It's really hard giving planning advice to people who just don't want to face the issue. You need to find a way of actually getting them to see that the tax bill could have been lower if they'd come and seen you. much earlier in the year and giving you the chance to give some proactive advice. So planning, trying to get people to bring stuff in earlier, trying to get people to think about opportunities rather than last minute. That's the big barrier.
Love that. And perhaps it makes it really appropriate that although we're recording this in January, this episode will go out in February. And actually, for people who have just gone through the stress and of getting their tax returns done by the 31st of January deadline and so on, it's now is the time to use that feeling of, yeah, that was horrible, to actually do something about it for next time. Because I believe
that's it.
How you do, it's often said, how you do anything is how you do everything. And I suspect that the business owner who's leaving it to the 31st of January and having all the stress and making the errors and isn't in the planning and isn't getting the benefit of tax advice and all these sorts of things is also not being proactive about other areas of their business. And so this is an area where actually, in relative terms, it's not that big and scary once you've done it. And so if we can get ahead of it and get the planning in place, then it becomes a lot better. From your perspective and experience, like, what are some of the common misconceptions that perhaps people have around, paying their taxes, getting their returns done, working with HMRC, that you think perhaps unnecessarily amplify that stress?
I think one of the biggest things is people thinking there's nothing I can do to save tax. There's nothing I can do. Generally, there is. A married couple, a couple in a civil partnership, they've got two sets of allowances. I bet if you looked at most married couples or civil partners, you could say, actually, if you shifted this asset or you change the ownership proportions, you could use your allowances as a couple much more efficiently. On the 31st of January, you're not even thinking about it. You're just getting the return in. It's a mechanical process. 1st of February, although on the 1st of February, most accountants are actually down with a cold that they've been fighting off for the last 4 weeks because they know they can't afford to go down with it. If on the 1st of February, you looked at the same file and you wrote a question on the front of it, how could this couple save tax? You could write things underneath it in 9 cases out of 10. And if you actually think about it at that point, you've got a couple of months before the next tax year starts. You can get some paperwork in place. Some of it's really simple stuff like, whose name is the bank, whose name is the savings account in, whose name are the shares in, if you've got some shares. What are the ownership proportions in the business? Are we actually making use of the allowances we've got available? The trouble is, as I say, the last minute clients, you just don't get the scope to do that. If you can make a note to have a look at it in that first week of February, or even, when you get back from the cold or flu that you've been fighting off the 2nd or 3rd week of February, you've still got a few weeks before the next tax year starts. So I think that, the big mistake a lot of people make is thinking there's nothing I can do. In some cases, there is nothing you can do for really, really simple cases. Anybody with a business, anybody with investments, there is almost certainly something you can do if you just make the opportunity to think about it. I always used to enjoy giving that as a test for staff of what would you do? What would you do to save money? And we used to call it the golden 10 minutes on tax returns. Now, you're worried, you've got up to your budget, you can't charge the client anymore, so you don't want to put any more time on the clock. But actually, if you had another 10 minutes, what advice would you give? And actually, if you make that extra 10 minutes, even if you've already gone over budget on the client, even if you're not going to be able to bill it, I bet you it's what you come up with in that 10 minutes of trying to look for an opportunity that the client is actually going to be delighted to pay for. The rest of it is just my return. And again, the 31st of January people are generally the ones, they don't want to see their accounts. They're not interested. They'll sign them if they really have to. They don't really want to go through the return. They just want to sign the wretched thing and they want to know how much you're going to charge them. Wouldn't it be great if you could just change that relationship by saying, but if you did this, your tax bill next year would be lower.
Yeah, that's really interesting as well, because it kind of also highlights that for, if we take that as a specific example, as accountancies that are having to do late, sort of close to deadline accounting returns, and it's something that in December last year I did create a little fun parody song about being kind to your accountant at Christmas by getting this stuff into them on time. So if your client didn't see that video, send them for next year. But the other thing that I love the accountant can do is highlight, here's some things that if you can send me the information earlier next year, here's some things that we perhaps could have explored and done, is a really nice way to start sort of gently getting some of those clients change their behavior. But also, as you say, for those that have done it early, you're able to actually add that additional value. And you're right that from my perspective as a business owner and person who has to do a tax return each year, I'd find that hugely valuable if it came with those notes, and either comes with notes of here's what we can do and let's do this, or because you're a bit late, Alexis, here's what we can perhaps do next year if you're a bit early with that.
That actually takes you on to another area of stress. And that's the client who tells you what they've done after they've done it, and it's too late to give any advice. If they told you what they were going to do before they did it, quite often you could give them advice on either don't do it, or don't do it now, do it then, or why don't you do it this way instead of that way. The number of times I had somebody come to see me, again, generally in January, but not always with this particular point, to say, this is what I've done. I've sold this asset, or I've bought this asset. And you'd sit there thinking, yeah, but if you bought it next month instead of this month, you would have had a better tax break. And when you sold this asset, did you actually think about the tax implications? And sometimes the answer would be, yes, I thought the rules worked this way. And they probably did 3 or 4 years ago, but they don't now. And it's about the relationship you have with clients. And it's really difficult with smaller clients where there might be an occasional big tax liability or, big relative to them. Building that relationship where they feel comfortable coming and telling you, or picking up the phone to say, I'm thinking about doing this. Is there anything I should think about tax-wise? But if you can build that relationship, firstly, you can help people avoid unnecessary tax liabilities. And secondly, I think you have much happier clients because they're showing they trust you because they're willing to pick up the phone without worrying about the clock ticking. They're picking up the phone because they think you can help them. That's really good. And so many conversations I've had with clients over the years where they haven't thought it was a conversation about tax. It's been a conversation about, what did you do over Christmas? Did the kids come to see you? How old are they now? What are they doing? What are you thinking about in terms of a business for the future? What are you thinking about in terms of the kids and IHT planning? A conversation that starts about the family leads on to the tax issues. Quite often, if you start it the other way around of, right, why don't you come in and we'll have a chat about your tax? You don't get to the same point. Yeah. And it's about building up that relationship where people are willing to say to you, I'm thinking about doing this, or actually I've been quite worried about this. What should I do? That's when you can give the best advice.
I think that's a great point. And I think, as you say, having that relationship means that you've got that opportunity to get the advice and so on, because it'd be perhaps interesting to dive into sort of either ends of a spectrum that I've sometimes seen. So I sometimes hear business owners talking about how, or they'll say something along the lines of, oh, well, accountants are just an extension of the HMRC, etc. And although admittedly, when I tend to hear it, it tends to be from business owners who I would choose not to do business with, frankly. But, everything's a spectrum. And perhaps some people see accountants as, oh, well, it's very compliancy and they're not going to be, helpful creative or, not creative accounting, but coming up with creative ideas on how I can manage my business better and, be more tax efficient. Then there's kind of the other end of the spectrum that says, well, isn't any kind of attempt to reduce my tax bill, etc., isn't that basically some form of evasion? And isn't this, this is the whole problem, business owners trying to avoid their taxes, and everyone should just pay the maximum amount they possibly can. I've seen both opposite ends of the spectrum, like shared in social media platforms without anonymity as a view. And I mean, my view is that it's neither one thing nor the other. But I think that particularly when you've got this complex situation where people are worried about any attempt to be more efficient with their tax could be seen as evasion or just unethical. And at the other end of the scale, people worried that any idea that they might have and that they share with their accountant might be seen as illegal and unethical. Like, how should business owners be navigating that?
The rules are there for a purpose. They're there to set a framework. And yeah, I've seen the spectrum as well. I actually took on a few clients who came to me over the years because they'd had advice that they thought was right out at the edge and maybe slightly beyond it. And actually, in each case, it was advice that I wouldn't have given myself. I felt it was pushing the boundaries to the point where they were about to break. And what I've found over the years is people will say, I'm not getting proactive advice from my accountant. I want something more creative. When you actually sit down with them and say, okay, you've read about tax schemes. Let me tell you how it works. If you're prepared to accept a degree of uncertainty that means you wouldn't know for sure what your tax liability was for maybe a decade, how do you feel about that? You put your tax return in, we tell HMRC what you've done. They might inquire. If they inquire, we might be able to settle the inquiry in a fairly short period. But if we end up going to a tribunal, and then we end up going through the courts, and the kind of right out at the edge tax planning, that's where it heads, that's where it goes. You could be talking about a decade. And at the end of it, you might find that all you'd done was buy some time. You were still going to pay the same amount of tax. All you've done is have the use of the cash for longer. How do you feel about not sleeping well at night for a decade? And most people at that point just say, well, is there anything else you can suggest? And actually, there's a heck of a lot you can suggest that is completely within the rules, that is completely plain vanilla, that people actually much prefer because you get a lot more certainty with it. I did see clients who, happily from other firms, who came for a second opinion, who'd had that kind of uncertainty. I saw people who'd tried it because it sounded really good and then did lose sleep over it. It ain't worth it. There is so much good tax planning you can do within the rules. Yeah, you go out to the edge, but you don't push the boundaries to the point where you wonder whether you're going to push them so hard they break. So much you can do that's in that central territory. That's not to say that occasionally you don't do tax planning that is really creative, but creative within the rules. That takes a lot of time to put together, that takes a lot of time to think through, that actually takes a lot of time to deliver. So I'm thinking about one case where I had a business that was about to wind up, and it did, but they still had a lot of the trading property left. And they were coming up to the time limit where we were going to lose entrepreneurs relief if we didn't do something. So we did some fairly complicated planning in the sense of putting in a new holding company, a share for share exchange, and we made the share for share exchange create a liability. So it crystallized at the entrepreneurs relief, or it would now be BADR, but in those days it was entrepreneurs relief. For that whole thing to go through to the point where the company was ultimately wound up, but had secured the CGT rate of 10% rather than the usual rates, it was the best part of a decade. So some fairly straightforward tax planning can take a long time as well, but that was all safe. They were never at any risk. They were doing everything within the rules. It's just that sometimes it takes a while to churn through. I think understanding a client's genuine appetite for tax risk is really important. And if that appetite's too high, you might ask whether you really want to act for them. But most people, when you actually explain what they can do without losing sleep and what is going to cause them loss of sleep, will take a course that you're pretty happy to advise on and to plan through.
Nice. One of the things that makes me wonder is that how easy is it for the average or perhaps the below average business owner to really understand where on the spectrum their accountant's proposals are? You know, there have been famous examples of well-known celebrities who thought their accountant was acting in their best interest with a, great scheme that's all within the law and is within the law, but then later it's sort of regarded as, oh, well, this was a bit of a tax loophole and that gets closed. I've seen examples, given that I work in the software space, I've got friends who are software entrepreneurs who clearly have had a misunderstanding of how things like R&D tax claims work and so on, and what the requirements around it. And when I've told them, my understanding and what we do in terms of our process for creating these reports and so on, they go, what? No, my accountant just fills in a thing. And sometimes it can be hard for a business owner to know where their accountant is on that spectrum and how to even ask the right questions to understand that. Any tips that they can decrease their stress relating to it? Because I think I really like your kind of lens for how the entrepreneur can look at it and say, well, yeah, I don't want to have sleepless nights for 10 years if it means that, oh, good, I can pay ever so slightly less tax, maybe. I think that, yeah, most would say, no, I want more confidence. How can they make sure that that they have a good understanding of where their accountant is on that spectrum?
Okay, I would say this, wouldn't I? I think you go to a chartered accountant or you go to a chartered tax advisor. That is my honest advice, because if you do that, you're going to somebody who is regulated. They have to keep up to date. They're required to sign a declaration every year to say they have actually kept up to date. They've got professional indemnity insurance. If they get it wrong, at least you've got some recourse to the insurance. They're going to be monitored by the regulatory body. You're getting a standard of work, and you know that you've gone to somebody who signed up to an ethical standard. So the ethical standard in tax, professional conduct in relation to taxation, PCRT, sets boundaries for the way you advise and for the advice you can give. If you go to a member of one of the 7 bodies that signed up to PCRT, they've signed up to that standard. You've got some protection. They're not going to do really wacky stuff, because if they did, the professional body is going to deal with them. And that kind of leads on to trust, because trust underlies every relationship you have with a professional advisor. And yeah, I saw some stuff over the course of my career that really bothered me. An old friend of mine who's a writer went to a specialist firm that only dealt with writers and artists. And the advice that he had was frankly appalling. He came to me because he was stuck in the middle of a tax inquiry that was just going nowhere. He said, would you have a look at it? I had a long-standing rule that I only broke on this one occasion of, you don't act for friends. Your clients might become friends. That's great. But if you act for a friend, you're probably going to wreck the friendship at some point. On this occasion, I looked at the correspondence and thought, you're getting really, really duff advice. This inquiry can be settled in probably one exchange of letters. So I took him on, and we did settle it very quickly. So I think for me, the lesson from that is it's very easy to buy the line that the firm you've gone to is a specialist in your area. Just make sure they're also a member of one of the PCRT bodies, so they're bound by a code of conduct.
Yeah, and I want to just sort of spell it out for business owners that for whom what you just said is like, wait, what were you talking about there? Because that was something that I found surprising when I sort of, as you've heard me describe it, as being adopted by the accounting and bookkeeping industry, having now spoken at quite a few events for the industry now, where I learned that, I think my understanding or expectation was that given oh yes, there's all these qualifications and study that you need to go through accounting, and that there are these accounting bodies. I think I had made the assumption that to be an accountant and operate as an accountant, you must be part of one of these bodies, and as a result, it's regulated and so on. Is that the case?
Nope, absolutely not. Absolutely anybody you bump into in the street could put a sign on their door to say tax accountant, and they could do your tax return for you with absolutely zero knowledge. It's something HMRC is concerned about. I think the whole profession is concerned about it. It's really important that people do have access to quality advice. You know, as with anything else in life, you want to know when you go and see the doctor, you're seeing somebody who actually knows what they're talking about. When you take the car for a service, you want to know it's somebody who actually understands what's under the bonnet. I think it's exactly the same with the tax profession, with the accountancy profession. You should be able to rely on a standard of work that you're going to get, and a quality of advice, and some reassurance that if it all goes wrong, there's an insurance policy behind it. It is something HMRC is looking at the moment. There was a consultation last year on regulation. I think that is going to continue. The first output from that consultation is going to be a register of agents that HMRC is prepared to deal with. It's going to be an electronic register. It's going to take another couple of years to put together, but that will be a first step to giving people some reassurance that the advisors they're dealing with are actually known to and deal with HMRC on a professional basis. But for the moment, just check that your accountant, your tax advisor, is a chartered accountant, is a certified accountant, is a chartered tax advisor, or a member of one of the 7 PCRT bodies. Google it, you'll find out who they are.
Yeah. Fantastic. Really, really good advice. Moving on to a different area of your expertise that we spent quite a bit of time talking about, given that we were both speaking at the same sort of roadshow. I want to talk a little bit about making tax digital, because that's something that in the accountancy world is one of those, there's a change in the way that our clients are now expected to do things, and so we're going to have to change our ways of working and use of technology and all those sorts of things. And that was kind of the angle that we were talking about at the event. For businesses, many don't even become aware of these sorts of things, except when they open up their bookkeeping package and suddenly there's this new thing that says, oh, by the way, you can now use this tool to submit your VAT online to HMRC or whatever. Help us understand, like at its highest level initially, making tax digital, what is it and what's the impact to accountancy firms and businesses?
Okay, wind the clock back 10 years. There was nothing in tax law that said how you had to keep your records. I mean, the Taxes Management Act tells you what records you have to keep in terms of details of transactions, but not the format. So you could keep your records manually, you could keep a ledger, you could use a quill pen if you wanted to. You could use Excel spreadsheets, you could use software. The tax system allowed you to do any of those things. Making tax digital has come in 2 phases. The first phase was making tax digital for VAT and for businesses in scope, and that's now pretty much all VAT registered businesses. MTD for VAT said you have to keep your records for VAT purposes using accounting software that's been approved by HMRC as being compliant with MTD. So the effect of that was to say, okay, you can't use that old ledger anymore. You can use a spreadsheet, because some MTD compliant software called bridging software will pull the figures out of your spreadsheet. The thinking behind it was, if you're using software, then you're probably going to make fewer mistakes. Your records will be better. And because you're doing your VAT returns once a quarter, your records are going to be up to date once a quarter. That was the fundamental driver. Fewer errors because you'll be more up to date. But with MTD for VAT, most people are already filing their VAT returns electronically anyway. They could pull their figures from that old handwritten ledger and file electronically. The big jump for MTD is to say you can't use the ledger anymore. It's got to be a digital process from the point of recording the transaction right through to pressing the button and sending the summary figures to HMRC once a quarter. MTD for income tax, which is coming in April 2026 for businesses with turnover over £50,000, and then that will drop to £30,000 the year after. The big difference with MTD for income tax is, again, it's saying you can't keep manual records anymore. You've got to use software, hopefully exactly the same software you're using for MTD for VAT, if you're VAT registered. But instead of sending your records into your accountant once a year and the accountant producing one set of accounts and filing your tax return, you have to file your figures quarterly. It's not 4 tax returns a year. You just have to file the totals for that quarter. The thinking is that proves that once a quarter you've kept your records up to date. I think there are better ways of doing that, but we are where we are. But it does have knock-on effects. If you're an accountant, all of your clients who are within MTD for income tax have got the same quarters. The quarters don't follow your accounts year, they follow the tax year, so to 5th of April, July, so on. That means your workload is going to change because all of your clients for whom you're doing those quarterly returns are going to be sending their stuff in at the same time. If you're the business, yeah, it's a pain. You are going to have to send your records in more frequently. But maybe, again, it goes back to the first thing we talked about. Maybe it takes some of that last-minute panic away because you'll already have done 3/4 of the process by the time you get to January. So look at the underlying point here. If you keep your records more up to date, you're going to have, hopefully, fewer errors. You're certainly going to have fewer questions from your accountant in January saying, what was that payment of 120 quid to X for over a year ago? And you're scratching your head thinking, well, I don't know, I can't remember. If you're keeping your records up to date quarterly or more frequently, you're not going to get so many questions like that. At the worst, they'll have been dealt with at the point the quarterly return's done. At best, maybe they don't occur at all. So I think MTD is going to add more work. There's no getting around that. I think the trick is to see how that extra work can work for you. If your records are more up to date, you're going to get better quality information out of the records. And, one example I've given a number of times, I probably gave it on the sessions that we did together, is take one of my old clients who used to bring everything in the cardboard shoebox. I won't name the brand of shoes, but it was the same shoebox for 20 years. I hope he bought more shoes in that 20 years. But it was the same shoebox. Came in the last week of January. I used to rush to produce a set of accounts. Here are the accounts. As I said earlier, not interested. Just what's the tax bill and what's your bill, Paul? Having got him onto software shortly before I left practice, completely different kind of service. Keeping his records up to date, if not from day to day, from week to week. Cloud-based package. I could dip into it from my desk or even from my computer at home whenever I wanted to, obviously with his overall permission. And I could have a look and see what the state of his records were. If he hadn't done any bills for the last few weeks and he was running up towards his overdraft limit, I could actually ping him a message and say, you're going to have a problem with the bank fairly shortly, get some bills out. If he'd made a mistake or he was uncertain about something when he was doing his bookkeeping, he could just ping me a message and say, can you log in and have a look, Paul? You're giving a virtual FD service for a client who previously used a shoebox. If you think about the kind of advantages that software can give you in terms of the service you give or the information you get, then somehow MTD doesn't seem quite the chore. Look at the opportunity. And the other example that I often give is Sitting here a couple of years ago, the lock on the back door broke. We got the locksmith around. He fixed the lock. He sat outside in his car and he pinged me an invoice. I got the invoice electronically on my email sitting at this desk, looked at it. There was a click link to pay. I paid it. As his car drove past me, I got the automatic reply from the software he was using to say, "Thank you for paying my bill so promptly. If you rated my service, please would you do it on Trustpilot?" And I thought, before he gets a mile up the road, he's done his bookkeeping. He doesn't have to do it tonight or at the weekend. He's been paid. He's managed his cash flow. And I've just done his marketing for him free of charge. That is the way we should be looking at software, because then it's oh, by the way, yeah, you're up to date for your MTD quarter. Just press the button.
Yeah, that's fantastic. And I think, as you say, as you mentioned, it loops beautifully back to that first point around reducing the stress that tax and so on can bring. Often comes down to addressing the issues around deadlines. So yes, making tax digital, in theory, now you've got 4 deadlines rather than 1, but actually in reality, it changes your approach. It forces you to be more proactive. And then hopefully as a result, you can actually remove some of that deadline stress. And I think as well, reducing the uncertainty, knowing broadly what the picture looks like, because at the very least, you're having to get some kind of picture quarterly, but actually better than that, it's an opportunity to switch over, be more digital, and as a result, have your bookkeeping live, frankly, if you're in the example that you gave there where the invoice is sent and paid before they're a mile up the road. So it makes it so much easier for them to see what's likely to have to be paid and so on, particularly because the accounting software, it's very easy to then get those reports and calculations and so on. So I think that's really fantastic. For those that are perhaps worried about a slightly different stress point in this area, but related, contacting HMRC. Now, there's a number of reasons why someone might have to, whether they've got themselves into a bit of cash flow trouble. And so as a result, they're in a situation where, for whatever reason, they've left it too late to the deadline, they've not provisioned any money aside, which, by the way, if that's the case for you, you need to check out episode 149 of this podcast, in which I interviewed Mike Michalowicz about his model Profit First for how you allocate and put aside the money so that doesn't happen. But that's one situation, is cash flow. Another is perhaps you've got an issue, whether it's that there's a query or investigation or whatever. Another might be that you're actually seeking a bit of advice, or even you're getting approval for something that you're planning on doing. Whichever any of those are, I know that the idea of contacting HMRC or the country tax office of your choice, IRS in the US, for example, can instill a sense of dread. So what's your advice for perhaps handling those conversations more confidently?
I think be clear about what kind of contact it is you want. If it's, I'm going to have trouble paying my tax, I'd really like to talk about a time to pay arrangement, make the phone call. If you're in a tax inquiry, if you've got a tax inquiry open, for goodness sake, don't try doing it yourself. Rely on an expert. You need to rely on your accountant or your tax advisor, because you may not understand the implications of what you say. Something you would say in layman's terms may have a completely different meaning for tax, and you can inadvertently get yourself into a hole. So for routine things like, look, I'm going to be late with my tax return, would you give me a few extra days? Or I don't understand my PAYE coding, can you explain it to me? Or I think the statement you sent me is wrong. Yeah, contact HMRC, use their web chat, phone the helpline. You've read in the newspaper, the delays are not great, but those are things you can feel perfectly safe about contacting HMRC on. But if you get to more technical stuff, first asking for advice on how to do something, they won't give it. It's not, and in fairness, it's not their job. And even if they did, you can't rely on that. So don't do it. Go to a professional. If you need advice, it is worth paying for, whether it's getting your car serviced or whether it's tax or whether it's going to the doctor. Go to a professional. But if it's routine things, I wouldn't worry about talking to HMRC. They're genuinely very helpful. There was something else that kind of follows on from the last thing we were talking about that I think is worth mentioning because people don't often talk about this. And it's the importance of doing things at the time. Making a record of why you do something at the time you do it can be really important. So I'm going to give some shares away to somebody. Actually, let's not say shares because that's a bad example. I'm going to give a piece of property away to somebody just because I really like them. And I know I'm going to make a capital gain. But sooner or later, when I've done that, there's going to be an argument over what the value of that thing I've just given away was. I didn't sell it, so I haven't got a price in the market. So we're going to have to argue about valuation. Get a valuation done at the time you do it and keep it on file. Otherwise, you're probably going to end up having the argument in 2 or 3 years' time, by which time everything is done through hindsight. If you've got a valuation the day you made the transaction, if you're going to do something, if you're running a business, if you're running a company, and you do something that you know could be contentious, minute it at the time, because the power when you've got a tax inquiry of being able to say, well, here's the minute, this is why they did it. They made this minute at the time. It hasn't been backdated. This is what they thought at the time. That is stupendously good evidence. And the alternative to it is you haven't got anything recorded contemporaneously. 2-3 years down the line, you're in a tax inquiry and you're saying, well, this is why they did it. But you're doing that with hindsight as well. The value of contemporaneous evidence in a tax inquiry is just huge. Again, it's a good reason to have the kind of relationship with your clients where they feel comfortable talking to you about transactions before they actually do something. Whether it's buying a new combine harvester or whether it's selling a piece of property or whether it's giving away a piece of property or making an investment. If they pick up the phone and talk to you, again, part of what you might want to do is say, just make a note of this. Or actually, it's great that you phoned me because I'm going to make a file note and then I've got it. If somebody's making gifts for inheritance tax purposes, just having a note of this is what I did, this is why I did it. That's really, really powerful stuff. But people don't do it. And if you've got the kind of relationship where you do talk to your clients regularly, they're much more likely to. And you're much more likely to have the chance to say, do this as soon as you put the phone down.
That's great advice. Fantastic. Thank you, Paul. Next, I'm going to move on to some quick fire questions. So if you can, one sentence answer, please, although it's something I struggle a lot with, so I'm very forgiving. But we'll start with, what's the most common tax-related mistake that you see businesses make?
There are several, and probably it's what's capital and what's revenue. Have I done a repair or have I improved something? Classic argument for an inquiry. Another really good reason to make a note when you do it so that you've got a record of this is exactly what I've done. This is exactly why I did it. Capital versus revenue. And if the other big mistake I often used to see was somebody who was a landlord who had a loan and they try and claim the loan repayments rather than just the interest. Absolute classics.
Cool. What do you personally find most rewarding about working in the area of tax?
I think it's the human side. That's what I've really enjoyed over the career. You know, people think tax and accounting is about numbers. No, it's not. It's about people. And the more, in 40 years in practice, I got to know some people really well. They shared things with me and they share things with their advisors that they cannot share with their closest family because they're so personal and so confidential. Having people put that amount of trust into you is just a real privilege and a real joy.
Nice. What's your go-to strategy for managing your own stress?
I take the dog for a walk. I've got a border collie. If I get really stressed, I take her out for a walk. And frankly, if you're not de-stressed within 30 minutes of starting a walk with a border collies are probably going to stress you more in a much better way. Yelling at the dog, come back. What are you doing? Yes, I know there's sheep. I know you're a sheepdog, but you're not supposed to be in that field. does make you forget about the work stress.
That's good. Yeah, another deeper philosophical meaning on that one. What do you find causes you most stress?
What causes me most stress? Probably uncertainty. I'm a worrier. And probably that was one thing I did in practice. I always felt it was for me to do the worrying, not the client. It was my job to take the worry off the client. And all my clients used to say, "Oh, you're so calm, Paul." And underneath I was thinking, no, I'm not. I'm stressed as hell, but I don't want you to see it. That's my job to get stressed. How do you de-stress? The best advice I was ever given was by somebody who just had a nervous breakdown. One of my former clients, lovely guy, died a few years ago. He taught me this. He said, my psychiatrist told me, write down 3 columns. Write all your problems down. Column 1 is, this is actually somebody else's problem. Write their name in it and allocate it to them. Second column was, these are actually problems nobody can do anything about. And the third column is, these are actually my problems to solve. He said, the thing about writing it all down is you then have to be systematic in going through the list and getting rid of things. Because, he said, when I was having my breakdown, I used to have conversations with people about my list of problems. And every time they got very near to solving one of my problems, I didn't want to hear the last bit. I'd move on to the next problem. But if you've got it written down, you can't do that. You actually have to rule through things. I've used that technique and I've passed it on to other people, and it really works for me. I keep lists.
Love that. Really great advice. And if business owners can take just one thing from this episode, what should it be?
Plan ahead, create time, do things now, and keep a record. If you do it now, yeah, it's a bit of an extra chore, but my goodness, it will pay dividends when you get a tax inquiry in 3 years' time. If you can say, I know that's what I did because I kept this note, or I actually entered this transaction into MTD at the time, and effectively it's date stamped.
Nice. Fantastic advice. Well, I'll make sure that we link to your profile on LinkedIn, Paul, because everyone should connect with you and to learn more. But any other links that we should include so that people can learn more from you, or any other resources that you'd recommend?
I do Twitter. I refuse to call it X. And I've just gone on to Blue Sky as well, because I'm finding a lot of my friends in tax are moving from Twitter across to Blue Sky, just because the quality of the conversation is a little more civilized. So LinkedIn, Blue Sky, Twitter, at Paul Aplin on tax on the last 2. And that's where you'll find me.
Fantastic. Great. Well, we'll make sure that we link to those in the show notes as well. I'll also include a link in the show notes to some resources that I've got around essentially systemizing the business and getting things a bit more organized. I think particularly one of the things that we've been talking about is making sure that you're more proactive, that you're planning ahead, that you've got essentially the processes in place. That means that you're capturing the information at the time that it happens, and that you're ahead of the game when it comes to your self-attest tax and your tax returns and so on. So if people would like to check out those resources, you can find those at airmanual.co/resources. But also, if you found this podcast useful, and I'm sure you did, because thank you, massive appreciation to Paul for sharing his insights today. But if you are listening and you found it useful, please go to your podcast platform of choice, whether it's perhaps Apple Podcasts or wherever, and leave a 5-star review with a comment, even if it's just one word. Or if you're on this on YouTube, then hit like and subscribe and add a little comment, just giving Paul thanks. I would really appreciate it. It makes a big difference for the algorithms and all that sort of stuff. So it makes a big difference. But otherwise, thank you so much again, Paul, and to everyone else. Until next time, have fun.
Alexis, thanks.